you can take the time to do this, and this, but marketing is the last thing that gets done, maybe next to writing checks or bookkeeping. But it's the furthest from their mind right now. Right now, it's all about the grain and the physical aspect of it, and get it done.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Well, we're now at the weekend. Thank you for joining us today. Just a reminder, make sure you like these videos. Click on the bell icon down below to subscribe so we can let you know when we have a new episode out, and share these videos with others too, so that we can get the word out to as many people as possible. Well, today I have Relph with me, and he is with Comstock Investments. We're going to talk about the new October USDA report. And I just wondered, Eric, did it live up to expectations, or was it a nothing burger?
Both. I expected a nothing burger, therefore it lived up to my expectations. So I guess you could say both. Um, Nothing remarkable. I think maybe the biggest surprise to me was the global stocks in wheat. But really, I mean, 1/10 of a bushel on corn, 1/10 of a bushel on beans in opposite directions. And you trim the corn ending stocks down to a quote unquote below 2 billion bushel, but it was 1.999. So really not a lot there. And now we are stuck with still a burdensome carry number in beans. Just the stocks to use ratio is the worst it's been since the trade war of the late teens. And so, there's definitely concern. There's definitely issues there. And by all accounts, Brazil's going to start getting rain within a week in a meaningful way. And that's putting some additional underlying pressure on the soybeans. So wheat post double-digit losses after the report came out. That was a drag on corn. Without that, I don't know that corn was in the negative today. And corn continues to just kind of grind around a little bit. But yeah, that's kind of what we got today out of that report.
Can we take a look at the production numbers that actually came out from USDA in that report this month?
Want more? Sign up today for our premium content. You'll receive our reports twice a day, plus every morning, an in-depth market analysis with Relph. Every afternoon, you'll receive our daily podcast with Marlin Bohling. The first month is only $1.
Yeah, so production numbers, I mean, your overall production was higher than the average trade estimate, higher than the previous report. You can see that at 15,203. The yield was the big deal. The average trade estimate was a 181, coming in at 183.8 versus last month at 183.6. That may be a graphic typo. I apologize for that. But the soybean number, a 1/10 higher than expected, a 1/10 lower than the last USDA report. Again, just not enough to move the needle here.
Now, in my mind, and maybe I'm wrong in that, but to me, I look at this October report as the last one now before we get done with harvest. I mean, for all intents and purposes, we're going to have a month left, but from what I hear, we're making tremendous progress out there. And if the weather stays fairly wide open, I mean, the next ones probably won't have much impact. They'll be looking more ahead to South America, right?
Focus for the next 90 days is going to be South America. The January report's the next big one, and it is a big one. But yeah, that's the next time the USDA gives us anything meaningful. And aside from that, it's going to be reports out of the field. And those are always anecdotal. You never get the full picture by getting yield reports from clients. You can get a maybe better than expected or worse than expected type feel from direct reports from clients, but you're not going to get any kind of a workable number from anything like that. And it's interesting. There's a lot of stuff going on right now that seems to be, in my mind, underreported. Maybe we need to take this by the reins and run with it a little bit, but you're continuing to have rail issues that are affecting particularly the likes of Nebraska, Kansas, and even all the way anywhere that doesn't have a massive local end user consumption of grain, where they rely on the rails to get it to either big feeding country or to the Mexican export market. You've still got embargoes by BNSF and UP on any Mexican rail. This is a big situation. They can't get trains up to Nebraska to haul the grain out. So basis is deteriorating at a rapid rate, and they're full of corn. They have nowhere to go with the corn. I've had clients in Nebraska tell me that. I've had clients in Missouri tell me that the elevators are full. They're not taking any grain. They're adjusting the basis to make that happen. The reason is because they feel like they're getting 2 crops brought in right now because so much old crop was being held onto. So they're not going to wait for a lower price to sell new crop. They're just selling it. Those that are making that decision are selling it. And so those that took advantage of the early higher basis are glad they did, and they got rid of as much as they could. So you're starting to hear some of these things from all over the place. Meanwhile, the river is, I flew over the Mississippi yesterday and near Prairie du Chien, Wisconsin, and barges were backed up for half a mile right there by Prairie du Chien. So the river traffic is not flowing like they need it to, and that's going to continue to get worse by all accounts. So there's just a lot going on here that is going to impact basis, at least short term. Meanwhile, Brazil is going to start rolling really hard sooner than later.
The last couple of days on my daily podcast, I've been talking about the dry conditions out in the western part of the Corn Belt, roughly west of the Missouri River.
Mm-hmm.
And they seem to be really severe, and lots of wildfires now in cropland, hay country, and also pasture land. Really getting to be quite a serious problem out there. But it has really caused the crops to dry down so fast, and faster than what they normally would mature, from what I hear. The soybeans are shattering so bad that the farmers, from what I understand, are going after the beans first to keep them all from popping out on the ground. And they're having to take soybeans in so fast, they're putting them on the ground at the elevators, which is very rare. You don't do that very often.
Yeah, and that goes back to the moving logistics. You just can't get it done. What I think is funny, yesterday you had that report about fire, and 30 minutes before that came out, I had a client text me and said, well, I finally did it. I started the field on fire, and took 4 fire departments to get it out. And she knew, she's a multi-generation farmer. She knows when these instances occur where it's dry like that, there's going to be fire hazard, and she buys fire insurance and all those things. But yeah, she was worried about it several days ago, and then texted me yesterday and said, well, it happened. And then 30 minutes later, that report comes out. I was like, wow.
I used to live, when I was farming on the Kansas-Nebraska border, I used to live right across the road from a railroad track. And every once in a while, you'd have a train go by that would have a bad wheel bearing or something, and it would spark fires every couple 100 yards all along there. And off it would go, and the fields would go on and burn up. Windbreaks would burn up, and it was a very dire situation because you couldn't hit them all. There were so many fires. And I know several times I've had to go out there and try and put them out with a grain shovel and a 4-wheeler with a spray tank on it. But it's pretty bad out there. And from what I hear, the wheat is not getting a good start out there, if they even planted it.
Yeah, a lot of areas went unplanted so far. They have an opportunity here still, but without moisture, it's going to be tough. And as you know, I mean, if you get that germinated before winter sets in, then you're okay. If you don't, then you're done. And there's a lot of concern that that's what we're going to be facing in a pretty broad area, particularly in HRW country.
So the way we finished the week on the grains was not real grand.
No.
It closed on a very weak note. Technically, did that do any damage here on the grain charts?
It hasn't done any damage yet. We really, it would have been great to see a higher weekly close. I talked about that earlier in the week in our premium video in the morning. And I thought if we could recover, maybe we get a little supportive report, finish on a weekly high or a higher weekly close, then, forget about the early week weakness that we saw and all bets are off. We'll see what happens. And didn't get that. Finished the low of the week, both corn and beans. The only thing I can say is our actual technical support is still below the market. You're talking 5 to 7 cents lower in the corn and 7 to 9 cents lower in the beans. So within a day's reach. And if those areas can hold, then fine. If not, because if the EU model is correct, we're going to have meaningful rain hitting Brazil by the time the market opens Sunday night. And then you're talking, if you take out, if you do go a dime lower in the beans, then you're probably going to go challenge the lows that we saw in August and then mid 950s basis November. Corn, I don't think we'll necessarily go back and challenge lows, but we could sure go back and challenge $4 easy enough.
And in Brazil, they're looking at what, 2 or 3 million additional acres this year?
Yeah, which is actually a small number for them. I think Matthew ran the math and said they could, and this is going back a year or two, I think they could add 4 million acres a year for the next, I don't remember, it was many years, a decade, and not really make a dent. So it's pretty remarkable, the land expansion potential that exists down there. And in the U.S., sometimes I have conversations that make me feel like I'm having to teach geography, because they talk about Brazil like it's Honduras or something, and Brazil is the size of the U.S. essentially. It's pretty amazing what they have the potential to do down there, and honestly scary from a U.S. producer standpoint.
Okay, so we have all the turmoil going on in the Middle East. A lot of people are saying they're amazed that we haven't had skyrocketing fuel prices, crude oil prices.
Mm-hmm.
And I have to admit, I kind of agree with that. It's amazing how it has stayed squashed, if you will, relatively speaking. But has that been a drag on the corn market, do you think?
Maybe if there was a broad expectation that we would see that kind of a spike, and then we didn't. But all in all, I mean, corn kind of detached from crude oil when we became energy independent. We went from a net importer to a net exporter in a fairly short amount of time, thanks to the Bakken and the shale reserves and fracking, and that all happened in a historically short amount of time, and so I think that kind of shifted. You used to be able to overlay corn and crude oil, like it was uncanny how you could just lay those charts over each other and they would be so similar, and that's just not been the case for a long time. However, I think that there was a lot of maybe general commodity enthusiasm when all this started, and the energy sector was going to be one of the leading edges of that, and it just failed. And so when you start to see a vacuum on commodities, you're going to feel it everywhere. The likes of Wells Fargo, they don't pick March corn, they pick commodities, right? And that's going to encompass everything.
Well, you talked about how crude oil and corn used to be kind of tied at the hip, as I used to say. Mm-hmm. And I'm sure cattle producers right now are thinking, man, I wish that was the case with the Dow Jones Industrial Average. Here we went and made more new highs again on the Dow. Cattle market is kind of struggling. It's like it's floundering up here close to the recent highs.
Yeah, and you've got to think, I mean, fundamentally, the cattle market has always been strong. We saw a dip in the box beef that didn't last too long, but I made a comment in our afternoon report today that it was just 2 weeks ago, we had fallen below the $300 threshold in choice cuts, and really kind of thought that was going to break the market. The market sustained that. We did fairly well, worked through it. Now box beef is back up again. Choice cuts are at 311 on the early report today, back well above 300 again. And that's all happened in the last 10 days. So, fundamentally, the market has been really resilient. Cash has improved each of the last 5 weeks, including this week, which we should see about 50 cent higher fed cattle cash this week. Best guess. Obviously, we won't know that for sure until Tuesday next week. But all in all, looks fairly stout fundamentally, but technically it's heavy. It's way overbought, and that matters. And as much as people in the industry don't want it to, it does. And any speculative profit that's sitting on the table, once it stops performing, which it kind of is right now, then you're going to see an exodus there, and that will break the market. And then you'll start to see the hedge pressure follow it, because I feel like in the industry participants are eternal bulls, and they're always betting on the come, and they're always thinking, no different than when corn's at $8 and we're going, well, it's going to 10, it's the same thing. It's just going to keep going higher, right? But when it shows sure enough signs, no, we're not going to keep going higher. We're breaking, and we're breaking fast. And right now, then they'll start jumping on. So then you're getting double short positions, and really drives the market in a hurry.
While the live cattle is making a meteoric rise, just a consistent, almost straight up move.
Mhm.
The feeder cattle chart looks like it's maybe starting to indicate more of a rounded top pattern or something. Does that concern you?
Yeah, and that is a major concern. And we always say, cattle don't make bottoms; they make tops. You always see V bottoms in cattle, and then rounded tops, and then the other thing, little axioms I can throw out: feeder leader. If you see the feeders start to generate that kind of trade, and you're seeing those kind of chart formations, oftentimes the live cattle will follow behind.
How about hogs? They seem to be stair-stepping higher as they go. They didn't do a whole lot on Friday to wrap up the week, but do you view that as a constructive week because they didn't sell off?
Yeah, it's amazing to me. I mean, December hogs made another new high for the move today, and to see fourth quarter hogs making highs in the fourth quarter is pretty rare. I'm not going to say it's unprecedented, but it's pretty darn rare. And they are in rare air as well. They're way overbought also. And seasonally, you would have already seen the break, but we haven't yet. So is that the next shoe to drop? Is it going to be right around the corner and we start to see that market break as well? But I would add, 50,000 tons of pork on a weekly sales report yesterday morning. That was just massive. And I think we had a little bit of a delayed reaction to that, but we did. So Wednesday was hard down. Thursday morning, we get the export sales report. We take back all of Wednesday's losses. So it was a nice day and looked good to take back most of those losses, but you didn't make a new high. And then Friday, you come right out, trade $1 higher, make a new high, and all is well to end the week. And so now it's what's next. If they can keep that momentum, great. But man, it sure seems like a tough order.
Well, here we are at the weekend, and we're basically almost halfway through the month of October already. So when we come back in Sunday night and on Monday, what is the trade going to be focusing on, do you think?
Have the rain started in Brazil. I'll be watching global radars Sunday afternoon and on commercial breaks in the football games, but that's where we're going to be paying close attention. Has that started, and is it meaningful, as well as any headline news coming out of the Middle East? Those two things I think are going to be the big deal. Obviously the latter would influence the energy market more than anything, but that's going to be the big deal.
Given where we are, have you had clients expressing interest in maybe getting a little more aggressive about taking advantage of the prices where we are now after the recent rally?
I've probably had more regret for not taking advantage when we told them to than wanting to take advantage today. It's more a lot of conversations of, can we get back there? What has to happen to get back to those highs? And are we going to have the chance to sell that again? And here's the problem, Marlin. Every producer in the country is busier than hell right now, and they don't take the time to do what actually makes the money, and that is get their marketing dealt with. And I understand it. They're either in a combine, in a tractor, in a truck, and they're going 14, 18 hours a day, depending on where they are or who they are, or maybe what age they are. But all of these things have them so tied up right now, they don't take the time to even look at the market until it's time to go to bed. And then they lose sleep over it because we're down again and we lost that chance. Are we going to get that chance? And so while they're needing probably about 30 hours of sleep, they're only getting 3 because they're just compounding everything and not taking the time to focus on the marketing. And I heard one person say, you can take the time to do this, and this, but marketing is the last thing that gets done, maybe next to writing checks or bookkeeping. But it's the furthest from their mind right now. Right now, it's all about the grain and the physical aspect of it and get it done. And then, the phones will start to pick back up and it'll be more regret. I hope that we get that chance again.
So we're coming down the home stretch in the election cycle. I know a lot of people will be glad when that's over. Historically, have you had a chance to see if there's any correlation between a national election and what the commodity markets do?
Generally higher, particularly in the grain markets, because that's what I've studied specifically. You usually see higher stock market, higher energies, higher grains. And you can look back over the election years, and that's I don't want to say invariably, but 80% of the time, that's what's going to happen on an election year, as far back as I can read charts. And we've just seen nothing. And I think it's because either candidate has a tariff happy policy. They want to smite China and prove that we're the big dogs and they need to fall in line. And that, while it may be the right thing to do for our relationship with China and how they view us and our global trade, it may be exactly right, but it's definitely going to be detrimental to agriculture.
If we come in Monday or Sunday night and find out there's a big mushroom cloud over the Middle East, then what?
Crude oil is probably headed to $90. That would be the biggest thing. Wheat will be driven hard. Crude and wheat are always the first indicators. I can remember dozens of times over the years where I see crude and then I go find out what's going on in the world, because it's doing something that is erratic, which means something has happened, and a plane got shot down, or a country got bombed, or the forces invaded somewhere. It's been any number of things, but that'll be the thing to watch for, and that will be the biggest indicator.
So with new highs in the Dow, are you a fan of precious metals right now or not?
I have been a fan of precious metals for quite some time. I've taken the stance that any hard down days are just buying opportunities in a market that is begging to be held long. I don't know if that runs its course sooner than later, but for now, that's definitely what every indicator is telling you.
Very interesting stuff with all the inflation talk going on. I appreciate it, Eric. Thanks for all the time, and I hope you have a good weekend out there. Eric Relph with us. He is with Comstock Investments. And again, as he mentioned earlier in the podcast, he does have some premium morning content that he's involved in. And by the way, you can get a 1 month sample of that, a trial, for just $1. You might want to check it out. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling, and we'll catch you next time on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.